Stephanie, there are those two big things, the Fed middle of the week, the non-farm payrolls end of the week. What are you looking for here, and what would surprise you one way or another?
Well, it's good to see you, Tyler. Yeah, the Fed meeting, clearly we're all watching and listening for any kind of tone change in terms of taper. And I do expect they're going to taper. Is that in this month? Is that next month? It's probably next month. Any change to that would surprise me if they kick the can down the road, especially because we are seeing inflationary pressures for sure. Non-farm payrolls, I always look for the wage number. That's the most important thing because the jobs number on Friday is backward-looking. I look at, for jobs, initial claims. That's more forward-looking. So let's look for the wage numbers. I assume that they're going to be elevated. They're going to remain elevated, given that we have 10 million jobs opening around the country in terms of the JOLTS.
Mm-hmm. Before we get to some of your stocks that are interesting to you and ways to make money, we teased at the top of the broadcast an analyst who's quite concerned about the yield curve flattening, that long rates are coming down and that typically signals ill times for the economy, usually for the markets. Are you concerned about where the yield curve is, which is basically the difference between short interest rates and long rates?
Not really, because it's so heavily influenced by the Fed, right? So that's the whole thing. Rates should be a lot higher, quite frankly, and yields should be steeper, given the growth we're seeing, given the inflation that we're seeing. So I just think it's definitely being influenced by the Fed. So I'm just trying to focus on fundamentals. And Tyler, this is seasonally a very strong time in the market to be putting money to work and to be riding it out into the end of the year. And earnings so far have been really good.
All right, we're going to give them the fastest 2 minutes in sports right here. We're going to go through Link's picks. Starting with Match Group.
Yeah, so it's a reopened laggard. It's only flat for the year. It's down 14% from its highs, yet record levels of engagement and more to go. Only 25% of global singles are using online dating. So let's listen for the impact of Google Play Store fee cuts that could actually boost margins for Match into next year.
Steph, let's also talk NXP, probably the one I'm most anticipating because of the debate around whether they've overshipped for autos or not.
Yeah. Well, we had a good read through from On Semiconductor this morning. 33% of On Semiconductor's revenues come from auto, and auto hit a record in terms of revenues for that company. Fast forward to NXP, they do 50% of total revenues in auto. 25% of that 50% is growing above the industry average because of content increases and product mix. So I expect top line to be strong tonight, but it depends on supply constraints. I think over time, gross margins and operating margins move higher. The stock is trading at a 10% discount to the group.
And Fortinet, the security company.
This one scares me a little bit, Tyler, because it's up 126% year to date. So very high expectations. But I do think you're going to see strong product revenue and billings growth, the momentum to continue. Why? Because they have the price performance advantage. They charge 40% less to their customers, and they have 5 to 10 times the performance advantage. So they're gaining momentum in enterprise as well. So if it sells on the news just because it's had such a nice run, I want to buy it because I like cybersecurity, total addressable market for the long term.